Here's an interesting story. Remember, from investors.com, can we just remember who got us here? Okay? Listen to this. The 10-year Treasury yield set off roaring alarms about the U.S. budget when it surged to 5% last month. Now those warnings look like a fire drill. Federal Reserve rate hikes seem to be over for now, giving the bond market a reprieve and allowing powerful S&P 500 rally to resume. But enjoy it while it lasts. The next debt scare may be the real thing, and it could rock the U.S. economy and stock market. Here's why. The Fed's historic turnabout from enabling massive budget deficits to directing the sharpest rate hikes in 40 years has seemingly broken the budget. The Treasury market stress is almost certain to return. In the era of Fed quantitative easing and near zero interest rates promoted carefree fiscal policies that led to the U.S. racking up $20 trillion in federal debt since 2008. Exhibit A in the case of the broken federal budget is the deficit surge in fiscal 2023, which ended September 30th. Unemployment was near a record low and GDP growth was strong. Under those conditions, the budget deficit usually shrinks. But this year, it doubled to $2 trillion, and that's only if you ignore accounting for Biden's student loan forgiveness that was struck down. The Federal Reserve's fingerprints are all over the red ink. The Fed spent more than $100 billion in interest on its bond portfolio to the Treasury in fiscal 2022. It had to halt those payments last year as bond prices fell, having let inflation out of the bag at an 8.7 cost of living adjustment stoked a $130 billion increase in Social Security checks. Another $100 billion went to FDIC bailouts for Silicon Bank. To top it off, the Fed hiking is the key rate past 5%, forced Uncle Sam to pony up an extra $177 billion in interest on the debt. Here's the thing. Interest on the debt was $711 billion, went up in 2023, $711 billion, up from $534 billion in 2022, $413 billion in 2021. We're now running at a rate for this month, which will total $825 billion. So we have doubled the interest payments. Now, we're probably 12 months, 20 months away from $1 trillion in debt interest only. Remember, the entire budget that we can pay for, cover our bills if we were living within our means, is $2 trillion. The rest of it we borrow. What are you willing to cut by $1 trillion just to pay the interest? We are running out of options. The Fed says they have it all under control. Nobody is buying our bonds. The Fed is buying our bonds. So when you hear, oh, the S&P 500, yeah, Deutsche Bank just said it's going to go up. We're going to have a surge. Enjoy it while it lasts. And the problem is, only the ones who have tons of money in the stock market, and those are the ones who usually get all the bailouts, and they get all the government contracts and everything else, they're the ones in the stock market, they're the ones making all of the money. If you have money in investment, good for you. Good for you. But it is eventually going to go away. And guess who will win? All of those who are connected. All of those who are connected. You know, I like it like the old days when companies did something and you go, oh, that's really good. I want to invest. And their stock would go up. Oh, That's really bad. And their stock would go down. Oh, the economy is really bad. Stock would go down. Now, it doesn't work that way anymore. Nothing. The only one I've seen is Walt Disney. Walt Disney marked its 100th anniversary with Wish. Cost him $200 million to produce. It brought in, over the 5-day weekend, $19.5 million. Wow. Now, by contrast, Frozen brought in 125. Frozen 2, not even Frozen 1, Frozen 2 brought in $125 million over the same period. Indiana Jones, The Dial of Destiny, gone. The Little Mermaid, nothing. The Marvels, worse than the Hulk. How's that possible? And the only thing worse than that is Haunted Mansion. The only thing worse than that is Wish. It couldn't happen to a nicer group of people. These are the kinds of things that we used to see in America. You disconnect from reality, you lose. I don't know when we're going to see the first government bailout of Disney, but I'm waiting for it.